How many traders do you think pass a prop firm challenge? Not many, right? Maybe 10, 15%. Actually, depending on the firm, the number is higher than that. Some prop firms report pass rates closer to 30 or even 40% when you count everyone who completes the evaluation. But here's the part nobody talks about. Most of those traders blow the fund account within the first weeks. They did everything right in the challenge phase. They passed, they got the email, they had the capital. And then within days or weeks, it is gone. And the reason is almost never what they think it is. It is not bad luck, it is not the market. It is something that happens in your head the moment the account becomes a real one. And until you understand what that is, it will keep happening to you over and over again. Here is what changes the moment you get funded. In the challenge, the pressure is about passing it. You have a target, you have a limit, and your brain treats the whole thing like a test you need to get through. But here is the thing about a test. When the test is over, you relax. And that is exactly what happens to most traders the moment they get funded. Something in them exhales, right? The pressure of passing is completely gone. And without that pressure, the discipline that carried them through the challenge quietly starts to loosen. They start taking trades they would not have taken during the evaluation. They move a stop loss they would never have moved before. They stay in a trade longer than their rules say so because there is no daily target to protect anymore. It does not feel like discipline breaking down. It feels like some sort of freedom, like finally being able to trade without restrictions. But that freedom is exactly the problem, because the restrictions were not the challenge phase's rules. The restrictions were just your process. And the moment you start treating them as optional, the account starts bleeding. The challenge did not teach you to trade. It taught you to perform under pressure. And performance under pressure is not the same as consistent execution over time. Now, the second thing that kills fund accounts is something I call the size creep. This one is very subtle. It does not happen all at once. It happens trade by trade, week by week, in a direction most traders do not even notice until it is too late. Here is exactly how it goes. You get funded. The first few trades, they go well. You are confident, you feel like you have figured it out. And then, almost without deciding to, your position size starts going up. Not dramatically, just a little bit each time, because you are feeling good, because the account is real now, because you want results that feel significant. And then, what happens? You have a losing trade. And the loss feels bigger than it should because the size is bigger than it should be. And now you need to recover faster. So the size goes up again. This is the spiral, and it happens to traders who had perfectly controlled sizing during the entire challenge phase. Because during the challenge, the size was tied to the rules. After the challenge, the size is tied to the feeling. The fix to that is simple but uncomfortable. Your position size on the fund account should be the same or smaller than it was during the challenge, not bigger. The account is maybe larger, but your risk percentage stays the same. If you cannot make that feel okay in your head, that is the work you need to do before you trade the funded account at all. The third reason is the one that surprises people the most when I say it out loud. Most traders blow their funded account because they stop treating it like a challenge. Think about that for just a second. During the challenge, you were structured. You had rules. You had a daily limit you respected. You had a maximum number of trades. You had criteria for every single entry. You treated every session like it actually mattered. And then you got funded. And gradually, over days and weeks, the structure started to soften. The daily limit became just a suggestion. The entry criteria became flexible. The maximum trades became a rough guideline. And none of that felt wrong in the moment. It felt like growth. It felt like you were becoming a more experienced trader who did not need to be so rigid. But rigidity was never the problem. The structure was the thing keeping you consistent. Without it, you were not growing. You are just removing the guardrails. The traders I see stay funded the longest treat the funded account exactly like they treated the challenge. Same daily loss limit, same position sizing rules, same maximum trades per day, same entry criteria. They do not relax the standards because the pressure is gone. They keep the standards because the standards are what got them to that point. and they are what will keep them there. The fourth reason is the hardest one to say and the most important one to hear. Most traders are not ready to be funded when they pass the challenge. Not because they cannot trade, but because they have never had to manage the psychological weight of a real fund account over a sustained period of time. The challenge is maybe 30 days, maybe 60 max. The fund account is ongoing. It does not end. There is no finish line. And that is a completely different mental experience than anything the evaluation prepared you for. During the challenge, you had a clear goal, right? Get to here. Once you get there, you are done. With the fund account, there is no done. There is just next week and next month and the month after that. And the question is not if you can get there once. The question is, can you sustain this indefinitely? That requires something the challenge never tested. It requires you to be okay with a slow process, okay with weeks where you make very little, okay with consistency as the goal and not a big result. Okay with the funded account being a long-term relationship with a simple process and not a sprint to get a payout. Most traders blow the fund account because they are sprinting when they should be settling in slowly. They want the result fast because fast is what they practiced in the challenge. Slow and steady was never part of that training, and that is the real gap. So what do you actually do about this? First, treat the fund account like a new challenge. Set the same rules, keep the same structure. The fact that you pass the account does not mean you graduate from discipline. It means you earn the right to apply it at a higher level. Second, lock your position sizing before you touch the account. Write it down. Do not let the size move based on how you feel. If the rules say 1%, it is 1%. On the good days and the bad days. Third, accept that the fund account is a long game. The traders who keep fund accounts for months are not the ones who start with the biggest week. They are the ones who are still there 6 weeks later, still following the same process, still treating every session like it matters. You passed the challenge. That took real discipline. Do not leave that discipline behind the moment the real account opens. The challenge was just the test. The fund account is the actual job you need to do. You have to treat it that way. If you want help building the process that keeps you funded and not just gets you funded, I have a mentorship program called the Profirm Blueprint. Link is in the description if you want to apply. And if you are looking for a legit Profirm, I recommend Hola Prime. They have payouts being processed in under an hour, zero payout denials, and very transparent rules. Link is in the description as well if you want to use code NFX for 30% off. Thank you guys for watching, and I'll see you in the next one.